Hi traders, welcome to my video on the Gap Down Candlestick Pattern. Okay, so this is a very simple pattern that we can use to capture trades for some pips like this one for around 50 odd pips. Okay, so this is a very simple strategy. As I said, I'm using the MT4 platform here. What we're looking for is a gap downwards, hence the name, downside gap. Okay, there are various interpretations you'll find for this particular pattern. So this is the way that I interpret it and I would trade it. Okay, may not necessarily be the same for everyone, but this is what works for me. Okay, so this gap you can find on any chart time frame, doesn't really matter. The gap would still be the same. This is a weekend gap we're looking at here on a Forex currency pair being the US dollar, Japanese yen. Okay, so we can see a gap that's occurred over the weekend. It is a downwards gap, downside gap. And what we do is we look to trade the close of the gap. So when the market opens around here somewhere, provided spreads aren't too high, we can take a long trade. And we're going to wait for the price to move up and close this gap here of around 60 pips. And it almost does to the pip. However, it may not always close perfectly, which is why we can use a trailing stop and a break even just to lock in the trade and then trail to capture as much of the move as possible. So when the price does turn around, we're going to be up in profit. Okay. For the stop loss, it really does depend on your own strategies. Your own money management strategy. That is one thing I would say is this is not my favorite strategy and is not something I would trade, to be completely honest with you. And this is the exact reason why. Okay, the gap does not necessarily always close right away. If you wanted to capture all of this gap, in fact, it doesn't always close full stop. Okay, and even when it does, you can have things like this, which is a 60 pip swing in the opposite direction before it even began to close. Okay, so I wouldn't trade it based on that alone, personally myself. Not to mention this is a bit of a consolidating market as well, quite choppy. And the fact that the spreads are high can be high after gaps, especially weekend gaps as well. That being said, some traders do just trade the gap like straight away, literally, but not to try and capture the whole close of the gap, but they'll be happy just to capture some pips, almost in like a scalping strategy. But again, with high spreads, that can be even more difficult. But they would enter just right on the open here. And as soon as they see, price go 20, 30 pips, they just take that profit there. Okay, so that's my interpretation of the downside gap. Okay, other interpretations are that you actually wait for price to close within the gap. So you'd be looking around here somewhere, here or here, okay, before taking a trade, and the trade would be in the direction of the trend in this case. Despite the market consolidating, we can see that if anything, it has been making lower highs. So you can just wait for price to close within the gap there. Okay, you see that there? And then look to trade short. However, I wouldn't, as I said, use a strategy like this myself. I'd much prefer just to use the trend lines, use either take a trade based on a pullback to the trend line or a breakout of support, something like this level of support that you see here. Breakout trade like so. Okay, we look at another currency pair. Okay, you can see a gap here. Let's just go back. Okay, so gap there. Again, same principle applies. We look to place a long trade to capture pips on the close of that gap. As you can see, that's 20 pips, but again, the price went 30 odd pips before we would have seen any of those 20 pips. The gap did fully close, to be fair, but I wouldn't have taken this strategy based on that, not especially when you consider how high the spreads can be after gaps, especially on the weekend as well. This is the US dollar, Canadian dollar. If we were trading it the other way, the downside gap, which is when price closes within the gap, so here. Okay, the question would be, do we go long or short? I think prior to the gap, it's safe to say that the market was moving in an upwards trajectory. Okay, so, and in fact, it did continue going upwards there as well. So based on that upwards movement there, think it would be safe to say we'd be looking to trade long. So once the price closed within the gap, we could have considered a long entry. But again, for me, it's just too much, how to say, indecision, I guess. What I'd be looking for instead, like randomness. Okay, I'm not just going to take a trade because the price closes within the gap. Okay, especially after a big bullish bar like that, I'm not going to buy. Okay, instead what I'm going to do is I'm going to wait for a pullback, a significant pullback such as this, on a significant level of resistance. Okay, see that there. In fact, this resistance goes back as far as there. Okay, I can see we had this move upwards, we had a gap. So maybe the fact that price closed the gap would have been a good confirmation that for this particular trade here, as you can see, would have been a good breakout trade. The market clearly making these higher lows. So that's a strong entry there. Nice bullish hanging man candlestick formation there. You've got your three white soldiers, had three white soldiers here as well. Lots of bullish indicators, and we could have entered there. Perhaps a more aggressive entry would have been even before, based on price testing this. See this level of support here. So we had support here, become resistance here, and then a breakout above. And then interestingly, that support come resistance, it actually holds up well as support again around that hanging man pattern. So this could have been an entry point as well, if not the breakout here. Plenty of ways to take this trade in this trend without necessarily relying on the downside gap. So perhaps the downside gap we can conclude can be good for gauging market direction. And by that sense, I mean that if the gap does close in the direction of the original trend, then it may be a sign of a strong trend. Okay, hopefully you found something useful in this video regarding the gap. As I said, it is open to interpretation, and you will obviously need good money management. Some traders just trade the gap. Basically, every time there's a gap, a big gap like this, they'll just try and trade the close, and whether that's just for a few pips or more. However, I just prefer to look at the overall picture. If we go back to the dollar yen, the gap did close, to be fair, but then the price did continue moving downwards as well. Yeah, and be careful as well. Spreads around gaps can widen, okay, especially after a weekend when there's perhaps a lack of liquidity around the market open on certain currency pairs. Okay, thanks for watching. Please like and subscribe, and I hope to catch you on the next one. Take care.